Good morning, good afternoon, good night. Welcome back to the channel whenever you're watching this video. I appreciate the support, cuzzies. My name is Joe Josh. I go by iChart Daily. Today is Tuesday, April 16, 2024. Wanted to give you a market update. We've seen the potential play that I said almost about a week ago play out, right? Long-term trends predict short-term outcomes. And once again, I haven't said this in a while. Squiggly lines for the win, cuzzy. Right? F the news, trust the charts. So before I start this video, this is not financial advice. This is for educational purposes only. This is a window to my thought process, a process that I have been doing for 17 years now. I have very thick skin to the news and the BS. It's just the way it is. I have been invested in crypto, hypothetically, for about 10 years now. I've experienced and lived through multiple cycles, so I'm trying to regurgitate all of this information in these videos and educate the masses. So, in my last couple of videos, once again, I appreciate the support. Always love you guys. Without you, I'm nothing. I mentioned that we could have a potential break to the upside. What I was noticing was that on longer time frames, like the monthly, which holds much more value than a 7-minute or a 5-minute, was showing bullish divergence, right? We were seeing a bottom form on the MACD above the zero line. The zero line is when the histogram goes positive or negative. That usually means that the bleeding is stopped and we're not going down anymore. And the next candles that are coming in that are going with the golden cross are going to be retesting the most recent highs. So your next one's going to go to 106.64, then 107.28, and then so on, so on. Another thing that I was noticing that the RSI on a longer time frame came down to the 50 and found the bottom there. That is very bullish. When you have your RSI stop at the 50 line, that usually means you're having a continuation to the upside. There is section A plus, where you could use the 70 as support. There is section A, where you could use the 50 as support. There is section B, where you could use the 30 as support. And there is B minus, where you could use the 30 as resistance. All tell you a different tale on what's happening with the market structure. Because we went from oversold to overbought and then had massive blood down to the 50, that showed me that this was going to break to the upside, and we did. Now, taking a step back and I'm looking at this pattern, you can clearly see that. Let's just change the colors. Yellow is resistance and blue is support. This is going back all the way to 2008, and you need to understand the market structure to understand what's going to happen with your short-term trends. So, has this happened in the past? Yeah, of course. We've come down to the 50, came back up, and you can see this double top here, right? So with that being said, this took about 200 days, 150 days to play out. And it just so happens that this bull flag, right, if you just take the meat and potatoes from the 107 down to the support of 101 and copy and paste, you're looking at a breakout back to, let's just say, the all-time highs of 11114 to agreed level of the 112. Now, levels and waves on the way up, right? So your first one's going to be 107.19, then it's going to be 108.77, and then agreed level of, let's just say, 111. So now that I understand that there's room to grow on the monthly chart, meaning, yes, you're going to have bloody days, but overall the trend is going up. That means Bitcoin and the market and the stock market isn't looking too great, right? Because the reason why I teach you guys to somewhat look at the DXY is because when profit is being taken from commodities or whatever securities, whatever it is that's being traded, it goes back to somewhere, and the most stable coin that the government has right now, cuzzy, is the dollar, unfortunately. So we were looking at Bitcoin, and I said, well, we start long and then zoom in, right? Regardless of what's going on with those squiggly lines, the first thing we want to look is the MACD and the RSI. And I said, well, in order for this to be a continuation to the upside, like this one here, we need to stay above the 70. We didn't. Because we broke the 70 and the alerts were going off, and I was updating the Discord. Once again, links in the description. Join it. It's free. I said there's room to bleed. And because there's room to bleed, we saw blood, baby. right? We have been seeing blood for the past, let's just say, couple of weeks, right? So now the most important thing that I am noticing is this RSI, right? I don't think the bull run is over. I do think we have to prove that the bottom is happening. I'm going to explain this. We're playing chess right now, right? Because I do think we're at a point where we will see more blood, but the chart just needs to play out, and I'll explain. So in the past, this has been bear market top, bear market top, bear market top, right? We have one, right? 1, 2, 3. Never at like the 70 something. So what's happening right now? Well, you have to take a step back and look at the market structure, right? We were overbought, we went to oversold. We then formed this bottom and broke the RSI right here. This was the clear indicator that the trend was changing bullish in January 23. We have been making higher lows and higher highs ever since. That's very bullish. The most recent low is here, 62.18. In order to keep the uptrend, we need to have blood, but see buying pressure above this. We need to also stay above the moving average, because once again, I always teach you guys, just look left, right? Left is your best teacher, and line up apples to apples. We were bullish here. Once we broke the moving average, it was bearish. We were bullish here. Once we broke the moving average, we were bearish, right? We were bullish here. Once we broke the moving average, we were bearish. So now that you understand the importance of that, set some alerts. I'm going to set an alert here at the 64 and unsee what's going on right now, because I do think there's two scenarios that could play out, right? Let's go to the weekly chart. We're forming a rounding bottom. That's the facts, right? We have these lower lows, higher lows. We're using it as support. Now, what happens after the rounding bottom? Usually a cup and handle. I don't know if we're going to come down and use this white line one more time as support and come back up and then we do the cup and handle, or do we break down? We break down. The reason why I say that, this pattern that is playing out from the 52,000 to the 70, it's clear as day a rounding top. We could get rid of this uptrend line that has broken, right? You have this clear as day rounding top. You have this clear as day double top. What does that show me? Well, the first thing you need to understand in a rounding top is, where is the neckline? The neckline is here, 61.5. And if we were to break that, we would usually fill the side that brought us up back down to this liquidation level here. So we need to see, because it's okay to say I don't know, but it's not okay to say I don't know where it goes to. Are we going to break down, find support here, and then bring us back up? Or are we going to break the 61.5, break the rounding bottom, head to the liquidation zone of, let's just say, 53,000 to potentially 50,000, but then guess what? That brings us outside of the rounding bottom, a break of the long-term trend. Eventually you have to delete trend lines once they're obsolete and they're void anymore, right? This one here. The reason why I had that, because I literally was comparing these apples to apples to these, and it played out perfectly. And eventually I need to get rid of the rounding bottom when we're not using it as support anymore. As of right now, we still have this little apex moment right here. We have this little box to figure out what's going on. Now, short term, I still have to zoom in. It looks like we're forming support and we could come back up and maybe blah, 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 right? So the time frame that's going to help you understand the when is the one that's about to death cross next. So we were watching the 3-day and the 4-day. You can see the death cross, the break in the RSI market structure. We saw blood. We go to the weekly, that is the next one. So the next one, we did break the 70. And I'm curious to see if we break the support level of, let's just say, the 65 right here, and we make a lower low. Because if we make a lower low, that means there's room to bleed all the way back down to the 50 level. If we break and go all the way back down to the 50 level and the MACD death crosses on the weekly time frame, we're coming back down to the 53 to the 50,000 guaranteed. So now we have to play chess and speculate, right? Do we do this right now and then break down? That's option A. Do we break down now and then come back up and use this as resistance to 60,005, right here, 61.5, excuse me? That's what I think eventually does happen. We have this week to see what happens if poo-poo hits the fan, if another black swan comes out. If you remember me saying in the Discord, something needs to happen, right? The long-term trend indicators are telling me something bearish has happened. So all of a sudden, war, attacks, feds aren't lowering rates, right? What happens if the halvening happens in a week or two and nothing happens? That could be a great black swan event for everyone who knows nothing about crypto but listened to someone saying that the halvening is going to make them rich, and then the halvening happens and it's tax time and they need money and nothing happens. Then you're going to see selling pressure, especially if they're up, if they've been buying in the past year and a half since 15.5, right? So once again, I don't know what's going to happen. I'm going to set alerts. I do know I have a clear indication that we're going to break down. I just don't know if it's this week or next week. That's what I mean by I don't know. So I'm setting an alert at the 59.8. And now I'm going to zoom in. And the reason why I say I don't know is because we're extremely overbought and we're at support levels that we've been at on March 20th and back in March 5th and March 1st in February, right? Basically what we did was we have support here, we have resistance here. We have support here, we have resistance here. We have resistance here, we have support here. We need to see, are we going to have a dead cat bounce, form a lower high, form like a descending triangle, right? Here's this apex moment. So we come back up, we go to 65.9, we form a lower high to the 66.9. We come back down, find support, come back up, see resistance at the 63.9, form a lower high, come back down. At this point, if this lines up with the weekly death cross and the breakdown of that recent support, well, this, you would take this right here, copy, paste, and brings you exactly right down to the 55,000 to potentially 53,000, like I said. So once again, you have to let it play out. As of right now, we're not super bearish still because you're seeing wicks, you're seeing buying pressure, and there's still time for the weekly to form a top, right? You could have that extension for a week and then let it play out. In order, what a smart person's going to do is let the breakdown happen. Let the breakdown of 60,000, and then the play is to 57,000, 54.4, and then major support at the 52.8, right? But as of right now, if you zoom into the shorter time frames, you're going to start seeing major buying pressure. This looks like an Adam and Eve potentially playing out, right? Like something like you had this major blood, right? You had bear flag. Now you have this. You're having this double bottom. This is a sharp one up. If you have this rounding one, you could have the push back up to 67. I'm not too worried about that. I'm not betting bullish against bearish long-term trends. Plus, you know, if you're not a day trader, you don't need to force trades if you don't like it. And I'm going to end the video with XRP. Clear as day, we knew this was going to happen. And they said once we break this level of, let's just say, the 50 to 48 cents, your next major support's 42 cents down to 39 cents. We saw a wick down to it, and this is clear as day what I was talking about. What could happen with Bitcoin? It's just this is a longer one that's playing out. You're having the same support level of 47 cents, 48 cents, but continuous lower highs, and you can see here there's a little bit of room. And unfortunately, we have room to come back up, prove once again that the long-term trend, bearish divergence, will play out. And if we form yet another lower high, then this could come back down, eventually break, lining up with the Bitcoin breakdown, let's just say a week or two. And then that would take us back down to the 39 to potentially 37 cents, your next liquidation zone here. That's it. Love you guys. Appreciate the support. Any comments, questions, concerns, requests, leave it in the comment section. Appreciate it. Enjoy the day.